Hello, everyone. Welcome to the Spectra7 presentation for Ladenburg. Let me first remind you that our presentation today is provided under the cautionary notes shown right here, also available on our website. Let me first start by presenting Spectra7 to you for those of you who may not be familiar with the company. We're a Silicon Valley, specifically San Jose-based semiconductor company. We're a high-performance analog segment supplier and specifically focused on embedded electronics for copper cabling, a market segment known as active copper cables. The company has evolved from its traditional roots roughly a decade ago in a variety of consumer end markets, such as HDMI cabling, augmented and virtual reality, is now a very significant supplier into the data center and particularly data center interconnect market. Our devices are embedded within both ends of a copper cable and specifically within the connector of that copper cable. The advantages or benefits to the technology that Spectra7 brings to the market, to our end operator customers, is certainly significantly reduced capital expenditure as well as ongoing operational expenditure in the form of electricity or power consumption. A sampling of our key customers is shown at the bottom of the slide. This is just a subset of players in the space that are end customers, including, you can see the names, data center operators, cable suppliers. These are the folks who actually buy our silicon and embed it into cables, names such as Molex, Amphenol, and others, and a variety of equipment manufacturers, people who make servers, switches, and other equipment for data center infrastructure. The company has emerged, as I said, from its traditional roots roughly a decade ago in HDMI, USB, and other consumer cabling, started growing within the augmented and virtual reality or AR/VR space with key customers such as Facebook, Oculus, and many others. And over the past 5 years has been very much focused on the data center interconnect opportunity. This is what's driving our short-term and immediate significant growth in demand for our products, and is really changing the perspective and the overall scale of the company as we enter 2022 and beyond. But it's not just about data center interconnects. The same value proposition that active copper cables bring in terms of low weight, low cost, and low power is highly applicable and very valuable to a variety of adjacent markets. Amongst those are electric vehicles, where weight of cabling and low power are paramount, quite obviously. 5G communications infrastructure at the edge, particularly of the network, and certainly within the equipment, within a server, a switch, or other pieces of hardware, the value prop that we bring is very, very high. So our immediate and very strong growth is driven by the data center interconnect market that we have now penetrated very successfully, but also longer term, these adjacent segments will fuel additional growth above and beyond the data center opportunity. And speaking of where we are today, Spectra7's highly differentiated product is growing very quickly in what is today a large end market, namely infrastructure connectivity. We are experiencing very strong demand growth in the immediate, as our large base of 92 design wins as of the end of June of this year, in fact growing in Q3 and beyond, starts turning into revenue as our customers complete the development phase and start placing orders upon us. As we have announced quite recently, our current order backlog is roughly 7.2 million. In fact, has grown since that time quite materially from 7.2 million at the beginning of Q4 of 2021. And we experienced a doubling almost every quarter, every quarter this year. Third quarter reporting about $1.5 million of revenue and expecting between $2.5 and $3.5 million of revenue at the midpoint 3 for this current fourth quarter of 2021. Revenues are scaling very rapidly. In fact, roughly a factor of 6 over 2020 revenues. We did about $1 million last year. We'll do somewhere on the order of $6 million of revenue this year, looking at again, a multiple of that in 2022. We continue to expect positive EBITDA performance, meaning profitability in this current fourth quarter of 2021. Again, very significant revenue growth next year on a very lean, low level of operational expenditures. Now, let me tell you a little more about the opportunity that Spectra7 is addressing. Within the data center specifically, historically, there have been 2 ways to connect equipment. One is being low cost, pervasive, passive copper. So this is very simply unboosted, primitive, if you will, copper cabling. And for the longer reaches, data center operators have had to deploy, not necessarily by choice, but simply because they had to, because of the shortcomings of copper. They have deployed optical infrastructure, in particular what's called AOCs, or active optical cables. Spectra7 has pioneered and is bringing to market this new category known as active copper cabling. And think of it simplistically as a way to improve the performance, reach, as well as reduce the gauge and thickness of passive copper cabling, allow it to continue to serve the majority of cabling requirements within data centers. That's not to say that optics is going to go away. We don't believe that's the case. We believe active optical cables will continue, in fact, will grow. But by far the highest growth category of interconnects within data centers will be active copper cabling. That need and the value prop of active copper cables actually grows with data rates. Now, how do we compare and contrast these three different means of connecting equipment within a data center? On the far left, you see passive copper cables. These are ubiquitous. They're obviously the lowest cost connectivity medium within a data center infrastructure. The problem, though, with passive copper cables as speeds go up is the reach that's achievable, given the losses of the cable, is roughly a couple of meters or so. So while you'd like to deploy passive copper for the many obvious advantages it brings, it really is increasingly relegated to just very short reaches and very short, as they call it, use cases. Optical, on the other hand, doesn't have any of the impairments of copper cabling, but the problem with it is it consumes a lot of energy to perform electro-optical conversion, and also the optical fiber is inherently much more expensive than the copper as a connector. So here comes active copper cabling as a tremendous solution that is highly scalable to move passive copper cable and overcome the inherent problems and shortcomings of passive copper to reach all the lengths of cabling required within racks and from one rack to the next rack. Very important use cases within the infrastructure. We can reach up to roughly 7 meters of length. That's pretty magical within a data center because that covers all the requirements of cabling within a given rack or from one rack to the next over rack. It remains very inexpensive, certainly as compared to the optical alternative, and far lower power than active optical cables because, again, there's no electro-optical conversion required. Finally, these boosted or active copper cables are much thinner in gauge than their passive equivalents, allowing for much easier mechanical usage and better attributes of weight, flexibility, and so-called bendability. Spectra7 today is focused squarely on the hyperscaler data center universe. In China, there are three big players: Baidu, Alibaba, Tencent. In North America, known as the G Mafia: Google, Microsoft, AWS, so on and so forth. A very rich market, very large, inflecting rapidly, not just in terms of overall capital expenditures, but also in adoption of our class of technology, again, active copper cabling. The value proposition we bring to these data center operators is shown here as an example. This is from a case study with a particular data center operator. We save that operator two different ways. We save them CapEx, capital expenditure, meaning the cabling required for hyperscale data centers, as compared to optical, that's about $18 million in capital expenditure. And then on ongoing basis, operational expenditures are cut quite significantly because the power dissipation or the energy cost associated with our class of active copper cables is roughly 1/10 that of active optical cables, because there is no optical interface, there is no electro-optical conversion required, which results in up to $20 million in annual savings in operational expenditures. So it's not like our customers actually have to spend more to save more on an ongoing basis. They save up front when they deploy our technology, and they again save on a recurring basis every time in the power bill annually up to $20 million a year. So a very compelling value proposition to operators. We've been at this now for almost 5 years, entered the market in late 2017, and in 2017, 2018, and afterwards, we have been capturing a number of so-called design wins with end operators. As of the June quarter of 2021, it reported a total of 92 of these, each one representing a specific cable SKU for a specific data center use case. So, for example, it might be a 5-meter cable carrying 200 gigabit per second data rate using a specific, it's called 28 gauge copper cable for a particular operator, as for instance, a Tencent or another one. So we have 92 of these already on the books, roughly 2/3 North America and a third focused on China. Those names, again, being the names like Baidu, Alibaba, Tencent, working with 22 different cable suppliers. Again, 22 cable manufacturers using Spectra7, addressing this variety of hyperscaler data center operators worldwide. A very rich design win pipeline, as you can see. Of the 92, 6 have already moved into production, and there's a tail wash for another 86 on the way to production over the course of the next year and couple of years. As we look at the opportunity and we try to size it up, the opportunity is clearly at the inflection point today. We are the sole supplier of silicon today in the active copper cable market. And although optical is larger and is expected to continue to grow, based on our bottoms-up analysis as well as some third-party market research, we believe that the market size or the served opportunity for Spectra7 at the silicon level, which is our devices, eclipses $400 million. Again, $400 million by the time we get roughly 4 years out, 2025 or so. Today, we're picking up 100% of the design wins and the opportunities in this segment. We expect long-term there will be competitors. We will not be left alone. I expect at least a couple more competitors to come in. And so we will be sharing the market with other players. We expect to retain the dominant position because we have the first mover advantage. This is not simple stuff. It's quite tricky to develop these devices. It's even more difficult to integrate them into copper cabling. We have the recipe for that. We've been there, done that, and now growing very rapidly. So although we will share the market eventually, we expect very healthy growth ahead of us and very strong profitability to go with that. So a couple of key financial highlights. Latest close was $1.96 Canadian. That's post our 50-to-1 reverse split. We are listed, as I mentioned earlier, Toronto Stock Ventures Exchange, TSXV, and also OTC in the US, OTCQB under symbol SPVNF. Latest market cap is 63.5 million Canadian, roughly 50 million USD. Trailing 12 months revenues post our pre-announced third quarter are 3.2 million, again, roughly doubling every quarter at this point, and trailing 12 months gross margin, 56%. We do expect our gross margins to actually grow from here, only because as we grow the mix within the data center, we expect those gross margins to blend up, less consumer, more data center. And we have roughly 13.4% ownership by insiders, myself, the rest of my board, other insiders. We have some convertible debt left on the books. This note was about 15.5 million Canadian, is down to 8.2, so almost half of it, on a base of 32.4 million shares outstanding. So just to summarize, we feel we're in a very good place at this point, clearly at the inflection point with very strong revenue growth ahead of us, serving very large end markets, in particular data center interconnect market, but over time as well, multiple of these adjacent opportunities for use cases of active copper cables that I mentioned earlier, electric vehicles, 5G equipment, and so forth. We expect our revenue growth on a 4-year basis to be roughly 60% on a compounded annual growth rate basis, so about 60% CAGR. Gross margins, as I mentioned, to move up from the current sort of high 50s to 60 to 65%. And with that, EBITDA margins in the range of 25 to 30%. So just to summarize, very attractive end markets driven by a variety of cloud use cases and content migration to cloud, as well as artificial intelligence and multiple other drivers for adoption of this class of active copper cabling technology, expected to reach over $400 million market opportunity by 2025. We're highly differentiated in this market. We're the first mover, the innovator, heavily protected by 55 issued patents in this segment. We expect both long-term gross margins as well as operating margin expansion and continued profitability. We are the leader not just in the data center, but also in multiple consumer connectivity markets, and proven, backed by strong patent portfolio, as I mentioned, and of course enabled by a capital light business model where all our manufacturing is outsourced. So we believe this is a great time to be part of the Spectra7 story. Thank you for listening to it and look forward to talking to you. Bye-bye now.